Fitz-Gerald Group. Keith, you know, I said to Contessa a moment ago, we're down now for the month, for the first time since the spring, on all of the major market barometers, but it doesn't seem like it's been that bad of a month until kind of yesterday.
Well, I think that's a very insightful point. And, your words, deep and profound changes, that's the key here. The markets are testing the Fed's resolve, so you're seeing a lot of that. Second, many of the big names that are selling off today are, in fact, widely owned around the world. So it's logical that all the indexes, all the pension funds, endowments, the major players are going to have to rewire their holdings as a result of this sell-off. So now it's the computers duking it out. I think it's overdone. I think if you look at the broader scheme of things, the bigger numbers, the names we talk about frequently, they're gonna be there tomorrow when the sun comes up, and that's what you want to focus on days like today.
You know, when we're talking about tech, we're already seeing a mixed bag here where you've got Microsoft versus Alphabet, Apple this afternoon. Give me a sense of where the expectations are, where it may be the performance is not bad, but failing to meet expectations, and whether it's expectations, especially around AI, that need to be managed.
Well, that's a good question. And I think what you've got to do is focus on expectations. And you talk about whose expectations. Are you talking about company executives who know their products intimately, or are you talking about analysts who may never have worked in the industry, but that somehow are responsible for pronouncing judgment on it? I would submit that you want to focus on the executives. So I think Apple is going to produce probably pretty darn, I have rented lips today, pretty darn strong numbers. Meta is more wait and see. But then you got Microsoft, which is already talking about AI being a $10 billion run rate this year. So there's a big difference. Not all tech's the same. And that's the mistake that people are making today. They're painting it with a broad brush.
So let's play a game of Would You Rather with 4 stocks. The 2 M's, Meta versus Microsoft, and Amazon versus Apple. Would you rather Meta or Microsoft? And then Apple versus Amazon. Which would you rather?
Well, I'll tell you what I am doing. I do not own Meta. I do own Microsoft because I think it's a viable business. It's already got a lot of money on the plate, and it's really out there working. It's the maestro of earnings. In terms of Apple versus Amazon, I'd rather be and am Apple any day, and I do not own Amazon. Because
Why is
I think it's got.
Why is that?
Well, I think that a couple things. Again, the ecosphere with Apple is key. Amazon has got tremendous regulatory challenge. The shopping that everybody knows isn't what drives the business. We personally in our company use AWS. That's going to be the key here. But there's tremendous regulatory pressure. Customers are not happy with it. There's a lot of competition emerging. And within Amazon itself, Jassy is no Bezos. So I think the dynamic and culture has changed.
I also note that you own AMD and NVIDIA right now. Where do you come down on chips and the semis and Intel?
Oh boy, Contessa, that's a tough one because this just I hate saying this, but I think Intel is going to be lucky to survive this mess. I think that AMD and NVIDIA, dominant market players, GPUs, CPUs, clearly at the head of the game. Intel missed mobile, missed AI, missed a number of other things, and now they're trying to play catch up. I'm not sure they're going to be able to, and the Intel we know yesterday or knew yesterday won't be the one we see in 5 years.
Keith, we've spent so much of this year really focused on the Magnificent Seven. Is it time to truly broaden out past this and start to consider other stocks and other, I'll give you, for instance, if you're looking at insurance, which is seen as a defensive play, but a lot of the insurance companies have just reported earnings and have plans for growth.
Well, and that's a very valid point, right? But if we look back towards the late 50s, early 60s, even early 70s, it was not unusual to have even more concentration in the markets than we are today with companies like IBM and AT&T. So this notion of broadening out just for the sake of broadening out, I've never bought into. But if we're looking at where tech is going and which companies are going to benefit from it, clearly insurance, clearly medical, clearly pharma, because every business on the planet is going to adapt, adopt, or die when it comes to AI and to big tech in particular. So to me, it's the next logical spillover is going to be the areas where I'm looking: defense, medical technology, pharma. Those are the companies that I'm going to, quote, broaden out into.
Keith, it's great of you to join us today. Thank you so much for your time and your insight.
Thank you.